Hello everyone, welcome to my YouTube channel. So today I'm going to talk about the markets in terms of weekend update series. So the focus point for today's video is going to be the inflation numbers, that is the CPI inflation data that is going to get released next Tuesday. So that is going to be a pivotal, moment for the markets. So as you guys know, we had a tremendous run since last 3 to 4 months, and there is no meaningful pullback in the site since last 3 to 4 months. So we are in a very risky territory, and what are the factors that needs to be addressed? I will discuss all of this in this video. So without further ado, let's start our analysis starting from the weekly time frame. And let me go to the charts. So in the weekly time frame, as you can see, I normally do the support levels and the resistance levels on the time frame that is under the question. So in the weekly time frame, if we go to the charts, that is, this is a weekly time frame charts, the resistance level is sitting at 1.272, that is the Fibonacci ratio on the weekly level. So it is this one. And the level on the Nasdaq futures is 18,480. And if you talk about the technical indicators of Bollinger Bands, then the top of the Bollinger Band is still sitting at 18,500. So let's say on Tuesday, if we get a 2 handle on CPI, that is, even if we get 2.999, then the markets are going to rally heavily. Why? Because if we have a 2 handle on CPI, numbers, then Fed is going to, have to cut the rates. Why? Because now, essentially, the goal of Fed is to have 2% inflation, and the markets will, recognize this as a very bullish, development. So keep a close eye on the Tuesday's inflation data, because if we get a 2 handle, then we know that the upper Bollinger Band on the weekly time frame is going to get tested. So in my humble opinion, the weekly resistance is sitting at 18,400 level and the 18,500 level. Now, talking about the support, let us say that the pivotal moment on Tuesday, that is, if the CPI numbers comes in hotter than expected, then the markets are going to perceive this news as negative, and in that case, the levels that we need to make sure that we need to be aware of is, the first level is the 5-day EMA, that is on the weekly charts. It is sitting at 17,750 level, and the ultimate support is going to be provided by the anchored VWAP that is sitting at 17,280 level. And this anchored VWAP, I have anchored it on the start of the month, that is January of this year. So as you can see over here, this bright white line is going to provide an ultimate strong support. And this blue line, that is the 5-day EMA, is going to provide an immediate level of support. So this is my take on the weekly time frame, and the green zone that you see over here is a very strong support zone. Why am I telling this? Is because in this zone, the price has consolidated for more than 5 weeks. So we had a tremendous volume as well. And if the price reaches down to this zone, or if it tests the lows of this zone, then this would be a good buying opportunity. So with that, I would like to close this session for the weekly time frame, and now let us analyze the daily time frame. Let me discuss the important levels which are pertinent to the daily time frame. So talking about the support, let us say that the inflation numbers comes in hotter than expected. Then on the daily time frame, let me go to the charts and show you. So this is the daily time frame chart. And in this chart, as you can see, the immediate support is sitting at this 5-day EMA, which also corresponds or coincides with the level of R1, that is the pivot level on daily time frame. So over here, two things are coinciding: 5-day EMA and the R1 pivot level. So if we have a pullback, or if we have a rest day tomorrow, then the first level of support is going to be this one, that is the 17,900 level. And talking about the ultimate support is this one, that is the month to date anchored VWAP. So this month to date anchored VWAP is sitting at almost 17,680 level. So that will be a very, very strong support going forward on the daily time frame, because I have the confluence of anchored VWAP and the Fibonacci pivot level, that is the R1. This is fairly lighter. So on this chart, as you can see, the strong support are two. One is this level, and the other is this level. And talking about the resistance, let's say we get a bullish, inflation data, or we get a two handle, then this resistance that is on the daily time frame is sitting at 18,200 or 18,180. So that's the daily support and resistance for the technical charts. But to be honest, let us say we are already sitting at the resistance level of the pivots. So if you can see over here, the monthly pivot, that is R1 and the R2, are the price right now is stalling at these levels. So for those who are anticipatory in nature, for them we need a closing on a higher time frame, that is the daily time frame, to close above these levels for any case to be bullish. But if we don't close above these levels, then there are very high chances that the markets will have a pullback and then it will go higher. So for all the bulls out there, it is very important to hold this R1 level or the 5-day EMA. In any case, if we lose this 5-day EMA, then there will be a test of anchored VWAP, and that's a very high possibility. So risk to reward basis, Monday is going to be silent, and not a huge moves will be seen, but on Tuesday huge moves will be seen. So be very, very careful and be very, very mindful of these levels. Make a note of all the levels that I am discussing so that you become informed trader or an informed investor. So this is my take on the daily time frame. We still have room on the upside on the top of the Bollinger Band, and if the markets go south, then the ultimate level of support is going to be sitting at the anchored VWAP, that is 17,680 level. So that's my take on the daily time frame. Now I have made a change in the schematic of these videos. Normally what I do is I start with the weekly time frame, and then I go to daily time frame, and then I go to intraday time frame. But what I realized is if I consider all the three time frames and then I discuss the macroeconomic section, then the video becomes too long. So what I'm going to do is I'm going to specifically create the intraday focused videos, so that for the people who are trading actively, they should only see those videos which are pertinent to them. So now, continuing this video, let me discuss the macroeconomic scenario. Now, as you can see, we are in the macroeconomic analysis section, and what we have seen in the last couple of weeks is we have seen a lot of regional banks like New York Community Bank collapsing. Now the reason may be anything, but we are starting to see cracks in the economy. We are starting to see a lot of things falling apart. But since this is a regional bank, and since this is not a big bank, it is not ringing the bells. But what we are seeing is there is a lot of commercial real estate problem because of the higher terminal rate that is sitting at 5.25 to 5.5%. So if this continues, and if the underlying economy continues to weaken, I'm talking in terms of the massive layoffs and which are happening across the board, not only just IT companies, but the other week UPS also announced 20,000 cuts. The big tech is laying off constantly. So the real economy is starting to see a lot of cracks. That is number one conclusion. The second conclusion is, if the real economy is starting to see the cracks, will something fail, or will something crack so big so as to force the Fed to stop these high rates and to start cutting the rates? But so far we are in a very delicate situation, in which on one hand Fed is not determined to start the rate cuts very fast. They have told us in the last FOMC meeting that they are not even considering to start the rate cuts in March. So if this continues, the narrative that is going out there is higher for longer. So if this higher for longer continues, then something will break in the economy, and that whatever is going to break, nobody can tell for sure. But if something breaks, then that would force the Fed to start cutting the interest rates. So this is a Goldilocks scenario, in which the unemployment is not going up, or the wages are not going down. So everything that Fed looks for, all the data points that Fed looks for so far are holding up. So that is why we are in a Goldilocks scenario in which Fed is not, forced to cut the interest rates, but at the same time, the underlying economy is, deteriorating. And remember that this is the election year. So the ruling government is also going to try its best to, hold up the economy. So in this kind of scenario, you will see a lot of volatility and a lot of swings. So normally what happens is, eventually the election year turns out to be positive, but I just want to give you a gist of what to expect in this year, because this is the real situation right now. If the incoming data changes, or if we get a good data, then I will keep you updated. But so far the conclusion of the day is, we are in a Goldilocks scenario. So there are pockets of market which I personally think that are in bubble, but so far we are looking good. So let's see how it plays out. But the macroeconomics section, these points still remains a main concern for me. But yeah, this is my take on the macroeconomy. And to actually summarize, the entire video, I would suggest that any, chop zone of 17,000 to 18,000 is a very, very highly likely scenario for this coming year. And any pullback or correction which will be more than 10 to 12% would be a very big buying opportunity for the markets. So that's the summary, and I would like to thank you for viewing, and please like, share and subscribe, so that this gives me motivation to actually keep on doing this stuff. And I hope it provides value, and please feel free to share your feedback and questions in the comment section below. And until next time, see you guys in the next video.